Good afternoon, everybody. This is Bob Iacino along with Mike Arnold. It is June 17th. This is a weekend update path chat covering the FX markets for the week that begins Sunday, June 18th. Happy Father's Day to all you fathers out there. Quick review of the week ending June 16th. It was all about central banks this week. The Federal Open Markets Committee here in the U.S. raised its policy target range 25 basis points to a range of 1% to 1.25%. From 0.75% to 1%. So that range will now likely fall more often than not in the 1.125% range. Now that wasn't really the news, one of the more expected rate hikes of my career, but what was the news is the Fed laid out a framework that it's going to use when it begins to shrink its balance sheet, the $4.47 trillion balance sheet. A process it indicates is going to begin in 2017, which was a bit of a surprise to the market. The Fed will initially let $10 billion in securities mature each month, $6 billion in treasuries, and $4 billion in mortgages, and $4 billion in mortgages and agency debt, gradually until it reaches a total of $50 billion a month. That'd be $30 billion in treasuries and $20 billion in mortgages and agencies. Now, this was interesting because they did not give out a start date, but they said it's going to start in 2017. Most analysts had it starting sometime in the beginning of 2018, so a little bit sooner than expected. Also, we had 3 declining CPIs in a row now, and Janet Yellen in the press conference really attributed that to transitory factors like the falling of cell phone prices and prescription drugs. By that logic, with the fall we've seen in crude oil prices, that could be added in to the next Fed minutes if they don't want to raise rates again. But they're still saying that 3 is appropriate in terms of their conversations, although Dallas Fed President Jeffrey Lacker did say that he would want to see more improvement toward the inflation target before they would raise rates again. And that's something he said after the rate hike was announced this week. The UK Bank of England also had a rate decision. They left rates and asset purchases unchanged, but it wasn't a 5-3 vote as opposed to the 7-1 vote that was expected. So that pumped a little bit of life into the pound. Now, people were expecting to hear comments about that afterwards, as Chancellor of the Exchequer, Philip Hammond, and Bank of England Governor Mark Carney had speeches scheduled for later in the week, but they both canceled those speeches out of respect for those killed and injured in the Grenfell Tower apartment building fire that happened in London. Hammond was expected to speak more on a case for Brexit, and obviously Carney would have been questioned on the 5-3 split, but we didn't get that opportunity, obviously, for tragic reasons. It seems clear now that the UK Brexit will be a little bit tougher after the snap election kind of went against Theresa May. Those are still scheduled to start this week, conversations between the UK and the EU. And again, they're expected to go a little bit less smoothly than was previously predicted prior to the snap election. The IMF bumped up their China outlook. They raised their gross domestic product forecast for China to 6.7% from 6.6%. It's not much of a jump, but it's still a boost. And Greek debt relief will have to wait. Greece's creditors reached another deal to release a further round of funding to keep the country afloat, but this did not include an agreement to cut Greece's debt load. Any talks of cutting their debt load now has been postponed until August 2018. Under the terms of this deal, Greece will be granted access to an additional 8.5 billion euros, but its debt remains excluded from the ECB's asset purchase program. The U.S. revised its Cuba policy. Don't expect much of an economic effect out of that, especially since you could have seen some cruise line stocks get hit a little bit, but the cruise lines will still be allowed to operate within the borders of Cuba. So nothing new really on that, but was a news story, so we do need to mention it. Outside of that, U.S. data a little bit weaker again. Consumer confidence missed. UK inflation much hotter, 2.9%, much hotter than the U.S.'s, and higher than the expected 2.7% they were supposed to get. So let's take a look at the upcoming economic calendar. Starting with tomorrow, Father's Day, June 18th. We've got the Reserve Bank of Australia Governor Lowe speaking on a panel. No real time for that. At 6:01 p.m., we've got the UK's Right Move House Pricing Index month over month for June. And then at about 6:50 p.m., these are all Central Time. Every time I give you is going to be Central Time. We've got Japan's adjusted merchandise trade balance and merchandise trade imports year over year. The only estimate I want you to watch is the trade imports, which right now is expected to have risen 14.5%. Last was 15.1%. Monday, June 19th, formal Brexit negotiations will begin. Sure, we'll be getting comments out of that throughout the week. In the evening at 8 p.m., People's Bank of China Governor Zhou Qiaochuan speaks in Shanghai. And then we've got the Royal Bank of Australia June meeting minutes 13 minutes later. Tuesday, June 20th, 2:30 a.m., Bank of England's Carney is speaking at a Mansion House event in London. He most likely will be questioned about that 5-3 split that we saw at the Bank of England meeting this week. Swiss National Bank's Jordan speaking in Bern. That's happening at 3:45 Central Time. And then in the evening, 6:50, Bank of Japan minutes from the April 26, 2017 meeting. And then 40 minutes later at 7:30, Westpac's leading index month over month for May. That's for Australia. Wednesday, 1:36 a.m. I know it's odd, but that's what it says here. Bank of Japan's Kuroda speaking in Tokyo. Then at 3:30 in the morning, we've got the UK public finances. And moving on to 9:30 in the morning in the U.S. Department of Energy, the EIA inventory numbers for crude oil. Thursday, June 22nd, 1 a.m., Swiss trade balance in Swiss francs, of course. Then 5 a.m., CBI trend total orders for the UK. It's expected at a 7 rating, came in at 9 last. 7:30 in the morning, Canadian retail sales month over month are expected to be up 0.3% versus 0.7 last. And then we've got U.S. jobless claims and continuing claims, as usual on Thursday. Then we've got the U.S. house price index month over month for April, expected to be up 0.5 versus up 0.6 last. We got those disappointing housing starts numbers last week. 9 a.m., Eurozone consumer confidence, expected to be a -3 versus -3.3 last. And then at 9 a.m., U.S. leading indicators for May. Again, that's for May. We're already nearing the end of June. So don't put too much stock in these, but they're expected to be at 0.4 versus 0.3 last. Getting into 1 p.m. on Thursday, we've got the Mexican peso overnight rate expected to be up 25 basis points at 7% versus 6.75% last. And then coming into 7:30 at night, Nikkei Japanese PMI manufacturing number for June, no estimate on that. And then Friday, a fairly heavy day-to-day, 1:45 a.m., French GDP year over year expected at up 1%. That would be unchanged. Germany's market manufacturing PMI, services PMI, and composite PMI. Manufacturing, 59 estimate versus 59.5 last. Services, 55.4 versus 55.4 last. And composite, 57.2 versus 57.4 last are the estimates. Then at 3 a.m., market Eurozone, manufacturing, services, and composite PMI. Manufacturing expected 56.8 versus 57 last. Services expected 56.1 versus 56.3 last. And composite expected 56.6 versus 56.8 last. Those are all for the month of June. 7:30 in the morning, Canadian Consumer Price Index month over month and year over year. Month over month 0.3 versus 0.4 last. And the year over year, which is the more important one, the expectation at 1.5 versus 1.6 last. Moving on to 8:45 Central Time. Markets U.S. manufacturing PMI, services PMI, and composite PMI. Manufacturing expected to come in at 52.9 versus 52.7. Services expected to come in at 53.9 versus 53.6. And composite expected to come in at 53.8 versus 53.6. U.S. new home sales come in 15 minutes later. That's month over month and the total numbers for May. 4.2% versus down 11.4% is what we're supposed to see on the month over month percentage change. 593,000 homes versus 569,000 homes last on the actual home sales number. That's it on the data. Let me turn it over to Mike now to let you know what he's seeing on the price action charts. Mike, it's all yours.
Okay, thank you very much, Bob. Caught in this pretty well-defined horizontal channel now for the Euro US dollar. Bottom coming in about 111.37 according to our rules. Top right around the 112.80 area. So we have it defined in here. We rallied up on Friday. If this channel does hold, we should expect to retest the other end of this, but there's going to be some key resistance right around the halfway point coming in about 112.05. Get through that, 112.36. Next level we'll be watching, then we'll be watching a return to the 112.80 area at the top. And then slightly above that, we have a new defining point on the trend line, the 112.95. If we do turn around and head lower, key support 111.37. Then we have about 111.14 down here. If we do get below those levels, we're going to be returning into a clear path, and we're going to be watching for a return to the 110.20 area right down in here. So those are the key things we'll be watching for. We will, if we do sell off, also find some support by this 110.71 to 67 key area. Switching over to the pound US dollar. Pound US dollar rallied up slightly on Friday and fell back down. Still have a declining rotation zone and a prior breakdown level. So this is going to be some very key resistance. Key resistance coming in about the 127.92 to 128.06. If we do get above the 128.06, watch for a retest of the declining upper end rotation zone 128.24. Then if we get through that, the 128.49 to 50 area. On a pullback, first level of support is going to come in at 127.40 area. Then we'll be watching for about the 127.21. If we do get through that, 126.78 is going to be key in conjunction with this rising trend line, 126.73. So about 73 to 78.80 level is going to be very key on the downside. US dollar, Japanese yen, nice big doji on Friday. For those who don't know, doji open and close are the same price, and this would be a long-legged doji, an official candlestick term because of the long legs on either side. So if we head back down, key support is going to come in about the 110.32 level Sunday night and Monday. If we get through there, we have a 110.20 to 110.24 cluster and significant level. Then we'll be watching for a breakdown to the other end of this zone coming in about 109.50 to 109.38. If we rally back up, we do have resistance as this 110.86 to 92. Then we'll be watching for a return to right around Friday's highs, 111.41. If we get through that, the 111.58 to 111.65 area is going to be very, very key. US dollar, Swiss franc, redrawn upper trend line now. So on a rally back up, we'll watch for a retest of the new defining point, 97.70. If we get through that, we're just going into a single candle. Next target on that would be 97.85 area. Then the 97.95 area. Then we have a nice long clear path, which we can have some additional targets. You'll also have some resistance coming into this 98.05 area, declining 50 exponential moving average. If we pull back, first level of support 97.17 to 20 area. Slightly below that, but 97.08, rising 8 will come in, and then we have a significant level at 96.94. So we have to get through all those before we'd even bother to look at the 96.74 key area. Switching over to the Aussie US dollar, big moves the last 3 days. You can see these big tails. So continued rally. We have a new defining point up here at 76.35. If we can rally up, that's going to be our first target level. Get through that, we're going to be watching for the 76.44, then the 76.65 area. Then we have again level projection and significant level at 76.74 to 76.75, key resistance up there. If we pull back, The major level we'll be watching for support is a 75.36 and then the 75.26 to 28 area. If we do break down below this, going to have some support coming in at the rising 21 75.12, and then we're into a clear path. We don't have a new lower trend line that's tradable yet, but we'll be watching if we do break down into this level, especially if we can get down to the 50 coming in about the 74.98 to 75 level. CAD, again, big wicks on these candles. Ran up on Thursday, ran up on Friday, and closed lower, straight down to the 12.5% gain level, 132.11. Heading lower into Monday, we'll be watching for 131.87. Then we have a lot of support coming in between this 131.75 to 131.65 area. Rising trend line, prior low, and a key 75% retracement gain level. If we get through that, next level down we'll be watching for is 131.14. If we do rally, minor resistance coming in at 132.58. Then we'll be looking for the 133.05 to 133.12 level, declining rotation zone. Then if we get above that, next major area we'll be watching for is about the 133.64. It's tough with these two long tails, because if we rally all the way up, you're going to be watching for the tops of these areas and the declining 50, which is coming in right around the 134.64 area. Finally, US dollar Mexican peso rallied up on Thursday, reversed lower on Friday, retesting the prior little swing low, 17.90.07. If we continue lower, we're using some GAN projections to project our next levels down, coming in at 17.78.57, then 17.67.07. So those are going to be your next targets down lower. If we do rally up, key resistance coming in both around Thursday and Friday's highs, 18.15.57. If we get through that, we're going to be watching for the 18.24.58, followed by the 18.30.56 levels. That's all we have for you with this FX weekend update. Turning it back over to you, Bob.
Thanks for that, Michael. New Money Path podcast is out. You can find it on our website, Path Trading Partners, or Google Play, or the Apple Music Store, iTunes. And don't forget to like and subscribe to these videos if you like what we're doing. Check out our other two weekend updates on futures and on individual stocks. And don't forget to check out our cryptocurrency updates if that's something you're into. Cheers, everyone. We will talk to you in the next Path Chat.